how we do that in the coming months. And that most certainly will come here as well as to the other funds. This is my third of these, so I've now gotten to hear some of the manager presentations. This will be the third time, and I know the same is true for others here. But I guess I want you to know all of that. Like, we take the responsibility seriously. We're looking forward to working with you on it. And we really want to make sure that for NYCERS and for BRRRRs, we're bringing, our A game so that we can continue to provide great returns, really responsible fiduciary investing, and just guarantee the retirement security that all of you and all of your members deserve. So thank you for being here. I'll stick around for a little while. That I look really forward to working with you, and I know you'll enjoy working with Allison and our team as well. John, now I guess I'm kicking it over to you for the official John Dorsa ribbing sessions.
Yes, no problem. So with that said, after those fine remarks, we have one item, or I should say two items, that Mike Adada is going to touch on in the public session, and then we'll take a motion to go into executive session. So, Mike, I'll turn it over to you.
John Dorsa, just one quick question. Is Sandy on? Did you want to note that BRRRRs was in attendance? I'm not sure if Sandy's on or not.
So Sandy will not be joining us today. However, his staff has been invited. This is a public meeting, so I was gonna make that notice when we went into executive session, but happy to do it now.
Okay, why don't you recognize the NYCERS staff, the BRRRR staff now, for the record.
No issues. Antonio?
Yeah, so just Antonio Rodriguez from New York City BRRRRs. Sorry if you hear my daughter's in school in the background, but we will take up these items at either our scheduled January 27th Board of Trustees meeting. We currently do not have enough board members appointed for a quorum, or at our February 8th Executive Committee meeting.
So thank you, Antonio. And with that, if there's no objections, we'll turn it over to Mike Adada to walk us through the public session.
Good morning, all. And it's nice to be on what we still refer to as a sim here in BAM, from BAM parlance. We're wrestling with what to call the other meetings, but we're going to stick with sim for this one. So before we launch into the 4 investment recommendations, I wanted to update the trustees on 2 developments that I think are worthy of your time. First, on basket clause, and second, recent market developments. On the basket, I know that Allison gave you a brief rundown last week during your regular meeting, and I wanted to touch on a little bit from an investment perspective. As one who has gone through 2 asset allocations with the Callan folks and all of you who have approved it, it is massively frustrating the constraints the basket clause put on an optimal asset allocation. We are not allowed to allocate in the most prudent way to the asset classes that offer the best risk-adjusted returns because of this, pardon my language, but antiquated legislation. In many of my meetings with Brad, I've stressed the importance of it. He got it right away and has marshaled resources to be helpful in this. And we yet are going at it again with our friends up in Albany. A little different twist this time in that the previous attempt, our request was to increase the cap on foreign equities, the exemption cap from 10% to 30%. We are sticking with that, but in this time we're also adding a request to either take that piece of legislation under consideration, or to just increase the basket from 25 to 35%. We've gone through a few different pieces of analysis. And as you all recall, the assumptions that drive the asset allocation, the expected return, expected risk, and expected correlation, they're all assumptions. They're 10 years out looking. And with any type of 10-year forward assumption, the outcome is going to be, not exactly that, but the right direction. Either one of those, if we were able to get that done, would be extraordinarily positive for the future expected returns, and I'm confident the actual returns. So it's underway. We're working with the governor. Fingers crossed, hopeful, optimistic. I'm not sure the right word to use, but I just wanted to alert you of what we're doing. And I'm going to turn it over to Allison to add any other comments on basket before I switch to recent market developments.
Good morning. Just give a little bit more specifics on what Mike talked about. The comptroller and I had a meeting with Governor Hochul's team, I guess early last week, to make the request that they include the expansion basket in their budget. Leaving that meeting, I think we left cautiously optimistic that they understood the issue. They're going to do some digging themselves. The state, New York Common is supportive, and Comptroller DiNapoli is that he supports. New York State Teachers is supportive. So the other public pension systems in the state, are supportive of expanding the basket as well. As far as I know, it was not included in Governor Hochul's executive budget presentation yesterday, which is not surprising since we only brought it to their attention, 5 days prior to that. But there are a number of opportunities within the budget cycle for it to be added. So the first opportunity is the 30-day amendment process. So 30 days after the governor introduces her executive budget, she puts forward amendments to update the budget based on conversations, et cetera. So the reason we wanted to move so quickly on the resolution today is because this is our only meeting prior to the end of that 30-day period. And so we want to get the advocacy in as early as possible. If it does not get included in the 30-day amendments, that doesn't mean that we don't have a chance. Things, for those of you who follow the Albany budget process in the past, that things get added all the time throughout the process up until the end. So, we really we're sort of marching towards March 31st when the budget is approved to see if we can get it passed through that process. And if not, we have the remainder of the legislative session to move forward. So that's the plan.
Thanks, Allison. Any questions on basket?
Mike, this is Robin Roach from DC 37. Good morning. So I do have a question, and I'm just trying to clarify what I heard. Can you repeat what the alternative would be to increasing the foreign investment cap?
Yes, the increase the basket clause from 25% to 35%.
35. Thank you.
Yes.
If maybe I could just chime in here, because I asked for us to approach it this way. These two different alternatives do essentially the same thing. The goal is to increase by, hopefully up to 10%, the flexibility that we have for that range of private market and alternative investments that have had good returns in recent years and that we think are important as part of our asset allocation to strengthen returns in the long run. And basically either way would do it, increasing the cap on foreign equities, which are now required to be part of the basket, anything above 10%, or just increasing the basket. So it's not that we want both things necessarily. I guess we would take them both, but there are two alternative ways of achieving the same goal of increasing by, up to 10% the flexibility that we would have.
Thank you, Mr. Comptroller, for that clarification. I appreciate it.
Any other questions on our attempts to get some basket clause relief? Let me just spend a minute on recent market developments from my lens, and then importantly, the impact on your portfolio. I don't think it's lost on any of us that the equity markets have come off their recent highs. The S&P index is about 5% off its all-time highs, and the NASDAQ's about 10% off its all-time highs. So what's driving the retreat, if you will, from the bull market in equities? In my view, it really has to do with what's going on in the bond market. We've talked at length about how accommodative monetary policy is. We've talked at length about the extraordinary fiscal stimulus that was put forward by the federal government that's helped the recovery from all things COVID. And interest rates need to react to this and need to adjust. inflation is a problem. The Fed has pivoted a few months ago to recognize that, and they have to take actions to do so. So we've quickly in the bond market gone from expecting some amount of tightening to even more tightening, and we've quickly gone from expecting quantitative easing. We know that's going to, the Fed has accelerated their timetable for ending that, and now they're talking about quantitative tightening as well. Just some simple round benchmarks that have happened in the bond market. The 2-year note yield, at its low was probably 15 basis points, is now over 1%. And we know that bond markets are global, and importantly, the Bund, the 10-year fixed income security in Germany, has now rallied all the way to positive territory. I know we've kind of joked about that in the past, but at its lowest point, it was minus 80 basis points, and it's now slightly above zero. And again, as a reminder, we've talked about valuations in the equity market. And when we look at valuations relative to price or earnings or anything along those metrics had showed the equity market to be extraordinarily expensive. On the other hand, valuation metrics versus the bond market, and there's a whole host of those, had shown the equity market to be more fairly valued on a historical basis. So if the bond market is going to move higher, then that metric stops being so positive. And to me, that's part of the ebb and flow in markets. The bond market led, the equity market followed, and now we have to see exactly what the Fed is going to deliver. So currently we're priced for 4 rate hikes in the front end of the bond market. The back end is still relatively benign. It's moved up, but it hasn't moved to the same extent as the front end. And these developments are going to play on your portfolio. In terms of where you're positioned now, as a reminder, we within our rebalancing ranges had a slight overweight to equities. We methodically, I think over 10 or 11 different rebalancing trades, had reduced that equity overweight, and only on days when the market was at or near its highs, such that when this turnaround happened, you were flat equity. So the overweight was taken off before this downtrade had begun. You have a slight underweight to your core fixed income program. As again, we've had this view that interest rates were not priced properly, and the slight overweight, which offsets that, is in the cash part of your portfolio. And we're talking small, we're talking 1.5%-ish. So well within the ranges, but we're doing our best to keep your portfolio at or near where it needs to be. And just again, as a reminder, your public equity portfolio is around 45-46% of your total portfolio. So even though we're at your targets, it doesn't mean that it's not hurting. And importantly as well, a lot of your asset classes are highly correlated to the equity market. Think private equity, think opportunistic real estate. And those all have their lags in how they report, but the risk factor in equities is very, very high in your portfolio. So let me pause there for any questions on current developments or your portfolio before we launch into before we end public session.
So I'm not hearing any, Mike. So I think at this point it's appropriate to see if there's a motion to go into executive session so we can discuss some.
Wait, so John, are we gonna vote on the resolution for basket? Or are we doing that?
That's a great segue, and not just because you're my boss. That was a great segue. So I'll leave that up to the board. We have the resolution that was provided on the basket, which we think is the appropriate next step. We can either discuss that now and take a vote on the resolution, or we can do it at the end of the meeting. But I think as Allison highlighted, to get it done today is the optimum in order to convey to Albany our desire as a board to seek some basket relief.
John, this is Cindy. Why don't we take it up in the caucus to really provide the trustees a fulsome opportunity to discuss it, since I think Karen just circulated the draft of the resolution a short time ago, and to give folks a chance to actually read the resolution.
No objections here. Just we want to make sure everybody has a chance. And I also want to say to the newer trustees that are not as familiar with the basket clause as some of the other folks sitting around the table, please feel free to ask questions, even if it's in the caucus. This is an important issue that's been around for several decades. The boards have been trying to seek different ways of getting relief for the basket. And by way of history, when I started 20 years ago, it was 15%. And over time it got to 25. And I think it should change with the times, just like everything else. So that's just
right. And John, and just for folks to, as they're reading through it, the NYCERS board has supported all the efforts over the last 8 years to increase the basket clause. So it's not that it's a controversial issue. It's just I want to give folks a chance to read the resolution and to be familiar with it. But the board has been in full support of increasing the basket clause to give the fund more opportunity to be able to operate in our current financial markets.
You got it. So with that, I guess, does anybody want to make a motion to enter executive session?
Motion to enter executive session, Ruben Torres.
And is there a second?
Martha Sabio, second.
Okay, so with that, we're all in favor?
Aye.
Aye. Aye. Aye.
All right, so there's no objections. We're going to go into executive session and we'll stop the recording. So Melanie, you have a report out?
Yes, the board agreed to support a legislative change to the basket clause, approved 2 private equity transactions, 1 real estate transaction, 1 public fixed income manager, and placed 2 emergent managers in a fixed income pool. The details of these transactions will be disclosed at a later date.
So with that, I'd like to make a motion to adjourn.
Can I have a second, please?
I will
Is that
second.
Mr. Master?
Usually fight over that one, but.
Yeah. Was that Mr. Master made the second?
Sure, second it.
Okay, thank you. I think all in favor, please say aye.
Aye.
Aye. Any opposed? Okay, have a wonderful day. Thank you, everybody.
Bye.
Thank you all. Stay safe.